Hi, I'm Jimmy. In this video, we're looking at Lululemon, ticker symbol LULU. So Lululemon stock has been cut in half over the past year. So we're going to dive into the business. We're going to look at the basics of the company's business, look at some of their financials, some recent updates on them. Then we're going to try to come up with a fair value for Lululemon stock to see if it's worth investing in today. Okay, so now let's jump over to the Investors Grow website. So we're going to do most of our research on the Investors Grow website. Link in the description below if you want to sign up to get access to that. Okay, first let's jump over to the profile section and look at the different segments where Lululemon operates their business. So Lululemon sells athletic wear for both men and women. They also sell sneakers. Now, they do this through two means. They have their website basically direct to consumer, and then they have their individually owned stores. These are company-owned stores. As of their most recent filing, they have 784 company-owned stores. That's up 17 from the end of their last fiscal year. So clearly they have a decent amount of growth. And then when we jump over and look at their geographic segments, well, we can see that the majority of their revenue is generated in the United States. 61% is in the United States, and then the rest is scattered throughout the world, although there is a decent amount of upside potential when we consider places outside of the United States. Now, Lululemon has done a fairly good job of building a solid brand. We'll look at some of the numbers in a second, and I'll show you what I'm talking about. But one of the things that I found interesting about what they do is they have, for example, yoga classes. You can go to a yoga class in some of their stores, and then, of course, they try to sell you some of their products. But the yoga classes are free, and you can join and become a member to them. It's a really interesting setup, and it's allowed them to build a very premium brand with a fairly loyal customer base. So they've stated that the way that they're trying to grow their business, with the way management wants to grow it, is through a few different factors. First, product innovation. So one of the things that Lululemon is fairly good at is they're fairly good at getting feedback from customers and incorporating that feedback into their products. They have a fairly quick turnaround cycle. Now, where many brands, when I was doing research for this company, I found that many brands kind of have these seasons where they release different products, where Lululemon has shortened up that time period to release their products much faster. Even if it's not releasing a brand new product, they might take an old product, maybe put new fabric in it, add pockets, different things like that, based on the feedback they're getting. But they can do it fairly quickly. They're able to, their turnaround cycle is much faster than many of their competitors. So product innovation is one of the ways that they're trying to improve growth and retain customer loyalty. Then they have their guest experiences. Like I mentioned, they have different classes that they host. They have a rewards program that they've recently initiated, and they're trying to keep customers engaged and trying to sell products to customers that they actually want. Then they have market expansion. They are trying to open, like I said, they opened 17 stores since the end of last fiscal year, and they're trying to expand into different regions. There's a lot of potential growth there. So this could shake out to be decent for Lululemon in the long run. Let's say over the next 5 to 10 years. Okay, now let's jump over and look at some of their financials. So we'll kick it off with revenue. Now, revenue has grown at a decent clip over the past few years. In the most recent fiscal year, by the way, they already completed fiscal year 2025. Their fiscal year ends in January. So in January of 2025, that was fiscal year 2025. They're now in fiscal year 2026. Well, they had about 10% growth. Now, a lot of that was fueled by international growth. International growth put up about 34% revenue growth year over year, while growth in China put up about 25% growth. Now, again, we saw a moment ago that that's a smaller piece of their overall revenue, so it didn't exactly turn into like 30% growth. But still, considering their stock is down 50%, revenue has grown a decent amount. Okay, now let's jump over and look at gross profit margins. So gross profit margins looks at the cost of goods, what is remaining after they pay for making their goods. And their numbers are actually very good. They put up about 59% over the past year. This is better than both Nike and Adidas. I'll put their numbers right here on screen. Well, okay, fine, that's gross profit margins, but when we jump down to operating profit margins, once again, Lululemon's operating profit margins are better than Nike and Adidas. If nothing else, this tells us that although they're in a highly competitive industry, they have top-tier economics. Okay, now this brings us to some of the headwinds that this company has faced. So over the past year, there's been some pressure on their business in general, on their entire industry. Now, if we think about things like the tariffs, well, tariffs as long as the tariffs are imposed on the products that they make most of their products abroad. And because they do that, there will be tariffs that are now being implemented by this administration. There will be tariffs on many of their products. Of course, that will weigh on their profit margins. It'll weigh on the industry. It'll even weigh on how much they have, how much they can generate in sales. That's one of the reasons that US sales over the past year has really felt a lot of pressure for this entire industry. Clearly, that's going to continue to weigh on them until there's some, let's say a bit more clarity about the long-term trajectory of things like the tariffs. Now, from what it seems like a lot of companies in this industry are simply passing on the price increases from the increased cost with tariffs. They're passing on the price increases to the consumer. But again, you can only do this so fast. If you do it too fast, you could scare off some customers. It has to be done a bit more gradually, but again, that could add some at least short-term pressure until there's better clarity about what the long-term perspective looks like from a tariff perspective. Another, let's call it a point for the bears here, is that like many companies within this industry, although they have good products and unique products, there's not a lot of patent protection on their products. So in theory, it is very possible that competitors jump in and could compete directly with what Lululemon does. In many instances, they could sell their product for a lower price, which again has the potential of putting some pressure on their, let's say, their long-term business model. This is why it's key that they continue to expand their customer engagement and they try to build up that community that is willing to stick with them at somewhat higher prices. So clearly, this is a potential headwind. Now, we can see some of those in the numbers when we jump over and look at profits. So this is a chart of net income, and you can see it is growing, although a bit more volatile than something like the revenue growth. When we jump in and look at the net profit margins, their net profit margins, again, are better than some of the big players in the industry, but it is a bit volatile, and that will continue to be the case. So I think that there's more, let's put it this way. There's more downward pressure on profit margins right now than there is upward pressure on profit margins. So although I do think that these numbers could get squeezed a little bit, it is impressive what they've done up to this point. Okay, now sliding down to the cash flow statement, I want to start first with capital expenditures. This is how much they spend on, let's say, opening new stores or upgrading old stores, things like that. Well, we can see that those numbers have increased a decent amount. And when we jump in and look at free cash flow, well, that has obviously put pressure on free cash flow. Now, when we jump over to the fair value section of the Investors Go website and we look at a chart for free cash flow, we can see that analysts are expecting for free cash flow to ramp up. By the way, the green bars here are analyst estimates and the blue bars are historical numbers. So we can see that analysts over the next few years are expecting for those numbers to ramp up. Now, for me, the way I'm looking at this chart is I'm looking at the broader trend. There can be a bit of volatility. In fact, you can see in recent years, there was a pullback in free cash flow and then a big jump up, but I'm looking at the broader trend. I think analyst estimates make more sense in that broader trend. Now, using just these analyst estimates, well, we get a fair value for Lululemon stock of about $186 per share. That's decent. It's not too bad. But what about when we jump back to the summary page and we can see that Lululemon, they also recommend that we look at something like price to earnings. Well, when we click on that, well, their price to earnings, this is a chart going back the past 10 years. And you can see that their current PE multiple of about 11x is actually quite low. In fact, if we draw a line straight across, well, we can see that it hasn't been this low in a long time. Now, of course, their growth has slowed down a little bit. There's been more pressure on their US business compared to their international business. Their international business doesn't have profit margins quite as high as the US profit margins. But still, I'm not sure that that justifies a PE multiple as low as 11x. Now, what are they doing to help shareholders? Well, when we jump over and we look at their shares outstanding, well, we can see this is a chart, again, of their shares outstanding going back the past decade, and it is trending lower. So this tells us right away that they've been buying back stock, which is a good thing for investors. So this brings us to the question, what do we want to do with Lululemon stock? Clearly, it's a relatively strong company that has been beaten down. I like the company. I want to add this company to my watch list so I can keep track of what's happening. Now, I'd like to see a slightly bigger discount from a discount of fair value perspective. I'd like to see a slightly bigger discount. If a stock could pull back a little bit more, I think this one could be a bit more interesting. But I do hesitate with the amount of pressure that's currently in place for this company in the United States. This is their biggest industry. This is their biggest geographic region that they focus on. And there's a lot of question marks. There's a lot of uncertainty, specifically around the, let's call it the regulatory environment that the United States is in, because this could put a lot of pressure on a company that imports a lot of their products. So I have some question marks here. Now, if we can get this one to be down a little bit more and increase our margin of safety from a fair value perspective, I'd be far more inclined to jump in and buy it at that point. But for now, I'm going to add this one to the watch list. Now, if I already own this stock, if you own this stock, I do think it's a high quality company that over the next decade is likely to do fairly good. But I do think that there's probably going to be a bit of pressure on their profit margins. So if we buy it at the right price and the company keeps buying back dividends and we can, have the patience to wait this one out, I think it could be an interesting company to hold for the long term. Now, if you'd like to sign up to get access to the Investors Grow website, I'll leave a link right here, link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.